buys a power plant for $4.7 billion. The truth behind America's power shortage: sockets that money can't buy. Is power the bottleneck at the end of computing? While OpenAI is still making promises, Google is directly throwing the table. Hello, everyone. As always, China lacks chips. The U.S. lacks power. The world lacks storage. And individual investors lack money to top up positions. Yesterday's rumor about the U.S. power shortage has been confirmed again. For those in the business of power grids, transformers, and electrical equipment, your spring may truly be just around the corner. Why do I say that? Just now, Google directly spent $4.75 billion, approximately 34.5 billion RMB, to fully acquire a company called Intersect Power. This massive investment directly forces the bottleneck of AI computing power from the graphics card side to the power generation and grid connection side. Many friends will ask, Google is so rich, why not just pay electricity bills? Why buy a power generation company? The logic here has changed. What the US is actually lacking now isn't that sky-high electricity, but grid-connected electricity and that big socket that allows you to directly plug in your servers. In the US, if you want to build a data center and apply for grid connection, the waiting list can make you question life, often lasting 3 to 5 years. What's Google up to with this acquisition of Intersect Power? It's called co-location. Simply put, since the grid is too congested, I'll build the power plant right next to the data center. Power generation on the left, computing power on the right. No need to go through the national grid in the middle. I'll generate my own power and use it myself. The 10 gigawatt project pipeline that Google has acquired is mainly located in Texas. As we all know, Texas is the energy heart of the U.S., vast and relatively unregulated, making it suitable for this kind of integrated source grid load storage. Speaking of GW, I can't help but laugh. It reminds me of the boast made by Optimus Prime Sam Altman some time ago. He said at a White House meeting that OpenAI wants to build 30 gigawatts data centers. Brothers, what does 30 gigawatts mean? That's the scale of several Three Gorges dams. Altman was talking big talk and raising funds via PPT, but Google's $4.75 billion is real money for 10 gigawatts. This shows that the arms race between giants has shifted from snatching NVIDIA's cards to snatching electricity in Texas. Finally, let's take a look at Google's wallet. Everyone thinks Google is wealthy enough to be a country, but in fact, Google's cash and equivalents on its balance sheet have fallen below $100 billion, around $98.5 billion. That sounds like a lot, right? But in the first 3 quarters of this year alone, it has burned through over $60 billion just on equipment purchases and factory construction. CAPEX. And next year's guidance is, it will increase significantly. What does this mean? It means that even giants like Google, Microsoft, and Amazon have tight cash flows in this AI and even energy arms race. Next year, we can probably see these tech giants lining up to issue corporate bonds. To summarize, the previous logic was whoever has the cards is the king. Now the logic has become whoever can get stable electricity faster, their cards can run. Therefore, this is not just a tech stock issue. For U.S. stock investors, the second half of this market trend may truly lie in those companies engaged in power grids, transformers, and independent energy development. Here are the counter-arguments. This is a counter-argument article written based on the information you provided. Unlike the anxiety marketing and linear deduction of the pro-side article, this article aims to refute the simple logic of buying a power plant can solve the computing power bottleneck by deeply analyzing the structure of the U.S. power market, especially the Texas grid, ERCOT, and the marginal effect of capital expenditure. Don't be fooled by Google's $4.7 billion gamble. The U.S. doesn't lack electricity. It lacks grid justice. When we talk about power shortage, what are we talking about? What Google bought isn't a socket, but a futures contract that may never be delivered. The truth about the Texas grid is far more brutal than the big promises painted by the giants. Just as the whole network is hyping up, power is the bottleneck at the end of computing, and even starting to speculate on power equipment stocks, I want to pour a bucket of cold water on this heat wave. Google's $4.75 billion acquisition of Intersect Power, seemingly a throwing-the-table move to build its own power plant, actually exposes the structural dead end currently facing U.S. AI infrastructure. This is not a major positive for the industry, but may even be a panic-driven, inefficient capital allocation by the giants. Why do I say that? Let's break it down in 3 dimensions. The false prosperity of the Texas grid, the regulatory walls of the co-location model, and the inherent paradox between solar power and computing power. Texas grid, ERCOT. The price of freedom is fragility. The pro-side argument that Google's heavy investment in Texas is because it's vast and relatively unregulated is only half true. The other half of the truth is, the Texas grid is the largest island and casino in the U.S. energy system. To understand the truth behind the U.S. power shortage, one must first understand the Electric Reliability Council of Texas, ERCOT. Physical island, the U.S., is mainly divided into 3 major grids: the Eastern Interconnection, the Western Interconnection, and the Texas grid. To avoid federal oversight by the Federal Energy Regulatory Commission, our Texas insists on not being extensively interconnected with other states. This means that once there's a problem with local power generation in Texas, such as the 2021 winter storm, power from outside cannot enter and the available power is insufficient, leading to a direct collapse. Congested blood vessels. The Intersect Power projects that Google acquired are mostly located in western Texas, where there is good sunlight. However, data centers are often built near large cities or backbone network nodes. The biggest problem in Texas now is not being unable to generate enough electricity, but being unable to transmit it out. The electricity price in western Texas is sometimes even negative too much generated and cannot be transmitted, while Dallas and Austin in the east are facing power shortages. The truth: the vast majority of the 10 gigawatts project pipeline that Google has acquired is still on paper. In the face of extremely severe grid congestion in the Texas grid, whether this electricity can be smoothly connected to the grid and transmitted to Google's data centers is a huge unknown. Buying a project does not mean buying electricity. There are thousands of kilometers of high-voltage lines and countless approvals in between. Co-location is not a lawless land. The ProSide article mentions power generation on the left, computing power on the right, without passing through the national grid. This logic is becoming increasingly precarious under the current U.S. regulatory environment. The so-called co-location means that the data center is directly connected to the power plant and pays little or no transmission fees. This sounds beautiful, but have you ever thought about it? The power grid is a whole. If Google directly diverts power from a large power plant for its own use, what about the residents and small and medium-sized enterprises that originally relied on this power plant for electricity? The grid must dispatch electricity from farther and more expensive sources to fill the gap. The result is the giants feast, while the people pay higher electricity bills. Currently, PJM, the largest regional grid in the U.S., and FERC, the federal regulatory body, have begun to strictly review this kind of sneaky behavior. Amazon's similar nuclear co-location project in Pennsylvania was previously halted by regulatory authorities. Although Texas has relatively loose regulations, Google's attempt to implement this kind of integrated source grid load storage in Texas is by no means lawless. Once it triggers a sharp increase in electricity prices for Texas residents, political pressure will instantly crush this business model. Intermittent solar versus constant computing power, the impossible triangle. The most core technical paradox has arrived. The intersect power acquired by Google mainly engages in solar and energy storage. What is an AI data center? It is a cash cow that operates at full capacity, run around the clock, requiring a power stability of 99.999%. The shortcoming of solar power, the sun only comes out for a few hours a day, and there's no electricity on cloudy days. The cost of energy storage. To rely on solar power to support a data center, one must be equipped with an astronomical battery energy storage system, BESS, to cover the night and cloudy days. This will exponentially increase electricity costs. Therefore, even if Google has 10 gigawatts of solar projects, it still cannot do without the backup of the large grid. Its so-called generating and using power itself is more of a financial green power hedging and ESG, environmental, social, and governance report beautification. In a physical sense, it still has to rely on the baseload power, such as natural gas or nuclear energy, of the grid like a vampire. Capital efficiency, is it foresight or panic? Finally, let's look at the finances. Google's cash flow has fallen below $100 billion, while capex is soaring. The current market logic is, as long as it's for AI, spending any amount of money is reasonable. But this reminds people of the 2000 fiber optic bubble. Back then, giants also frantically laid fiber, believing that there would never be enough traffic, resulting in huge overcapacity and asset impairment. Spending $4.75 billion to buy a developer note, it's a developer, not an existing power plant, means that Google will bear the construction risks, interest rate risks, and raw material price risks for the next few years. This precisely shows that the pressure of AI monetization has forced the giants to act recklessly. They are no longer pursuing capital efficiency, but are panic buying resources. The US does face power challenges, but in this story, Google is not a savior. It is just a hoarder, eager to seize resources. Texas is not a paradise. It is a wilderness full of volatility and transmission bottlenecks. Solar power is not a panacea. Without base load power support, AI cannot run. Therefore, for investors, don't blindly rush into power equipment stocks just because you hear about a power shortage. This infrastructure race has only just begun, and regulatory heavy blows, physical bottlenecks of the grid, and the exposure of giants' return on investment, ROI, may become the next stage's black swans at any time. The end of computing power may be power, but the end of power is complex political economy, not simple buying, buying, buying. This is a very sharp angle. If you add the variables of Texas politics and the 2026 midterm elections, the risk exposure of Google's acquisition will be further amplified. In Texas, electricity is not just a commodity, but also votes. Here is an in-depth counterargument based on the political landscape of Texas and the 2026 election cycle, which can serve as a nuclear-level supplement to your article. Political risk, a sacrifice in the 2026 midterm elections. The pro-side argument naively believes that Texas is a free market with little oversight. But it forgets the psychological shadow left on Texas politics by the 2021 major blackout winter storm Uri. For Governor Greg Abbott and Lieutenant Governor Dan Patrick, no grid collapse is the bottom line for re-election in 2026, or maintaining Republican control. California tech giants as the perfect scapegoat. 2026 is a U.S. midterm election year. If Texas once again faces a power shortage or a sharp increase in resident electricity bills, the Republican Party needs an enemy. There's no better campaign narrative than left-wing tech companies from California, Google, sucking up Texans' air conditioning electricity to build AI. Once public resentment boils over, the Texas legislature will not hesitate to pass restrictive bills targeting data centers. In fact, Lieutenant Governor Dan Patrick has repeatedly warned on Twitter, "We cannot let data centers and crypto mining rigs crash the Texas grid." You may have overlooked that Texas passed SB 6 Senate Bill 6 and related supporting policies in 2025, which specifically target large load users. One of the core provisions is, in the event of a grid emergency, ERCOT, the Texas grid operator, has the right to prioritize cutting off the power supply to large users such as data centers to protect residential electricity use. This means that although Google has bought a power plant in extreme weather, its data center may have to be voluntarily shut down. You spend $4.7 billion to buy a power plant, but at the critical moment, you are forcibly pulled off the grid by the government. What kind of computing power guarantee is this? What Google bought is solar power, but what the ruling faction in Texas wants is natural gas. Exclusion by the Texas Energy Fund, TEF. To repair the grid, Texas has established a multi-billion-dollar Texas Energy Fund specifically to subsidize newly built dispatchable natural gas power plants, not solar or wind power. The base of the Texas Republican Party is the oil and gas industry. They are essentially skeptical of, or even hostile to, Google's push for net zero emissions and its policy of only buying green electricity. In the 2026 election campaign, protecting Texas oil and gas jobs versus Silicon Valley ESG agenda will become important issues. The solar assets heavily invested in by Google may face stricter grid connection reviews or higher ancillary services costs. Regulatory minefield of virtual power plants. Google's attempt to implement integrated source grid load storage is essentially creating a state within a state in the existing grid. The Texas Public Utility Commission, PUCT, is currently re-examining the transmission fee allocation mechanism. It is highly likely that new regulations will be issued before 2026, requiring these co-located data centers to pay huge standby charges. Once this policy is implemented, the original economic account calculated by Google will collapse instantly. Summary: Google is building a data center on a volcano. Adding these political factors in, the counter-argument conclusion becomes even more solid. Google's $4.75 billion is not just buying unstable solar power, but also buying a ticket to the center of the Texas political storm. If the grid is stable, Google will face the suppression of the co-location model by regulatory authorities having to pay back transmission fees. If the grid collapses, Google will become the top target of angry voters and politicians in the 2026 election, being prioritized for power cutoffs. However, the U.S. is a country based on capitalism. The recently popular kill line refers to this situation. I estimate that Texas will still have to protect tech companies. After all, Google is a major taxpayer. Well, the U.S. power shortage issue has been completely laid out. As for the issue of individual investors lacking money, we'll discuss how to make money in the next issue. Bye!